Good morning, MMTs, 5:56 a.m., 8/18/2011. And what are we looking at? The gap opened up on the Nasdaq comp, and the biggest one is a SQQQ bear. SMF covers that bear all the time because what it does is it tells us how the bear side of the market has been making a base and then pulling back and then breaking and making higher gaps in pre-market, and it's evident here and now that the SQQ is doing just that. That's the bear. Now, you want to take a look at the gap open down. Well, it looks like the list wants to go a long ways. All the stocks that are gapping down right now are on the GO column. And as you scroll down here, when you get here, you can start seeing where price line is down considerably. Here, we can start off with the most important part, and that's going to be price line. Google down $10, Priceline down $12.85, Netflix short down $9.23. They're unwinding that Apple short today, down 6.94 ratio. ISRG down 6.55. There's that NTAP in TAP. Remember what its earnings down 5.91. Baidu, another nice gap down, had to catch up with Sina, SINA. Down another 546. Look at that Amazon getting. Look at this. Look at that bull. Look at that bull. TQQQ. Shorten that bull. Down 469. You've seen the SQQQ bear gap. Here you go. Ross Stores. It was bloated for a long time. They gave downside guidance today. Green Mountain Coffee. There it is. So look at the win. Look at the FFIVs. Look at the size of the ratio down gap opening bell. Right now it's 5:59. We open in 31 minutes. But look at the list. So look at that whole short side. What we're going to be looking for today is how we would capitulate the opening bell on the left elbow gap down. Once that left elbow gap down finally puts its market in again, it's going to be how that price action comes up off that bottom. If the price action comes up off the bottom extremely hard and fast, it'll be verified with the SMF platform. As far as trade management and all these left elbow ratio gap downs on Nasdaq comp. We also have things like some of the lower beta, but these are still, look at the ratio gaps all the way down to 1.00 qualifier. It ends right here. Right here is where it ends. Okay. You got Qualcomm, you have all the lower beta stocks, crops, things like this in here, but look at the ratio gaps down. Citrix Systems gapping down $1.73. CME, and how can CME be affected moving forward with the way the exchange models work? Okay, watch the win trade. That's going to work, but the highest beta is going to be the price line, the Googles, and we were trading the calls, and we kept featuring yesterday 545 put on Google. And we're in a monthly options expiration week, and we're going to open up in 29 minutes. So the way that the markets will open is that if we're going to capitulate a bottom, you will hit that bottom, and it will happen like within the first 12 minutes of the opening bell. And if it's going to be a directional movement breakout, it's going to ascend in price action value delta-wise in your SMF application. Then the pullbacks would diminish in the pullback, and then they would base and then break higher highs. That's when you know if a market is going to have a capitulation based on European news and banks around the world and everything that has caused the opening gap down right here. It's very important that MMTs understand that on the website, back in your live trading, when you're making your entry and your exits, is a lot of things were put into play this week because of this options monthly volatility, and a lot of people lose their ass. And yesterday we really focused on having that, putting that 525 call in and see what they're going to gap it down. It closed the last print at $10. I want alarms start being set at 680, 620, 590, and 550 bids here. We'll start there on that 525 call that closed in the money because Google closed at 533. Now this call is no longer in the money, so therefore they're going to steal that premium out to that wholesale bid on that 525. And this is what makes these left elbow gap downs, is that when they strip that premium out, they're going to inflate the put side on the opening. They're going to deflate the entry at the call strike price that was in the money, that gets stripped to that premium to the wholesale, gets stripped right down to that wholesale entry. Okay? All right, MMTs, that's the gap open up and the gap open down on the Nasdaq comp. And the trade management that goes along with it. Let us not forget that. I'll join you in the live trading room.